I recently moved from Chicago to Houston, meaning that I now have 3 out-of-state rental properties. Here's how I manage that to make sure that things don't fall apart now that I'm very far away. As it currently stands, I now own 4 properties. I have a condo up in Chicago, a townhome very close to that, also in Chicago, a single-family home down in Indianapolis, and now my primary residence, a single-family home in Houston, Texas. Long-term, if and when we move out of this Houston house, that will become a rental as well. But in the meantime, that means I have 3 out-of-state rentals to worry about, and those 3 rentals are in 2 states. Obviously, I'm not able to manage these things myself, so I've set up a team to try and run things efficiently and effectively so that I can continue to build my portfolio and I don't have to go off selling all these things and losing out on any potential future gains. Not to mention the nice cash flow in the meantime. Starting with my 2 properties in Chicago, both of these were former primary residencies. So I used to live in these things. The very first one was actually a house hack. It's a 2-bedroom, 2-bath condo. I used to live in a 1-bedroom. Eventually my wife joined me there, but in the meantime we had our other bedroom up for rent and we used the rental income from that bedroom to offset the mortgage. But the long-term goal was always to move out of that property and turn it into a rental, so that's now what it is. And that is currently turned over to management, and that's a manager with the real estate brokerage that I used to work for part-time in Chicago, so I trusted their process. I saw how things worked on the back end and was pretty comfortable. They take 8% of the rent roll as a management fee, and then I have to pay leasing fees when these things renew or if we get a new tenant and I decide to have them list it, which I will since I'm not going to be up in Chicago actually marketing this listing myself. And the cost to place a new tenant would be 1 month's rent. So the fees can get pretty significant, but I don't really have to do anything. And despite not having to do anything, I still make a few $100s per month in cash flow, and that's in addition to building up a reserve pile over time so that if the thing needs repairs or I want to make upgrades, I have some money set aside. And in most cases, I would have the management team do repairs if they're simple enough because they do have an in-house maintenance team, which is something I value in a property manager. But if we need to do more complicated things like an actual rehab or an upgrade to the property, then the management team can ask for quotes as well, and I can just pick the one that makes the most sense for whatever I'm trying to do. Now that property is in my personal name. I bought it with owner-occupied financing in my name. Eventually I restructured things and now there is a HELOC on it. That HELOC is also in my name. So if I were to transfer it into something like an LLC, that would potentially trigger a due on sale clause, and that could be a whole mess. So I don't think it's worth the risk for my own preferences. But down the line, transferring it into an entity like an LLC would be something I'd like to do, assuming I can clear the debt or if it makes sense to. But that's rental number 1. It's completely outsourced. And I bought this one in 2018, a few months after I'd graduated undergrad, which brings me next door to the other rental property I have in Chicago, which is a townhome that I bought in 2021. This one was the subject of a number of videos I did here on the channel, mainly the basement flood that we had there, but that's a story for another time. Or you can just check out my video where I've already talked about it because it's not a fun story. That townhome became my new primary residence at the time, and I lived in it for about a year before I moved out to actually make the move down here to Houston. And now that is also a full rental, and I turned it over to the same management team that manages my other property in Chicago. That's the nice thing about having a team already set up in an area. You can quickly plug in new properties into the system that you already have set up, and you can continue to scale from there. The hard part's getting the system built in the first place. But just like the other one, this one's also in my name because it used owner-occupied financing that was also in my name, not in an LLC's name. So to transfer it over to an LLC would potentially trigger the due on sale clause. I don't want to mess with that. I don't think it's worth the risk. And in the meantime, that property is fully rented. It doesn't cash flow very much of anything, but it is paying down the mortgage, and I'm building up reserves every single month to use for potential future repairs and upgrades. So those are my 2 Chicago rentals, but I'd mentioned that one I have in Indianapolis as well. That one I actually bought in 2020, and this was purely as a rental. I wasn't going to live in it at any point. This was strictly as an investment property. That one was already rented to a tenant when I bought it, and the same tenant is still there, so that's good. The big challenge with that property was building out a team in Indianapolis before and sort of during and after I bought it, because I was new to the area. I'm from Chicago, and I was doing this as an out-of-state investor, so I needed some help building up the team. I had a great agent to help connect me with a number of people, and I also did some vetting of various property management companies until I found one that I was comfortable with. And also like the one in Chicago, they are connected to a number of contractors in the local area, so if I need to do something more drastic or more major in actually upgrading or fixing the property, I have some connections there. But unlike the ones in Chicago, this one is owned in an LLC, which is actually owned by another LLC. So I have like a holding company up top, and then I have a property level entity that owns the actual property, and then that holding company owns the property level entity, if that makes sense. It's an LLC within an LLC or LLCception. But anyways, I have the infrastructure set up in Indianapolis, so if I want to add more properties to that portfolio, I can do it more easily. I have a management team there that I trust, and I have the legal structure pretty much ready to go to plug and play to add more properties. I kind of expected to be doing more investing out in Indianapolis in the last couple of years, but I've really been focusing on some other things, though I know I'll get back to it at some point. So those are my 3 rental properties, and like I said, I have a 4th property that's my primary residence here in Houston. So I'm managing that myself. But in addition to the property management and the actual day-to-day operations of the property, there's also the back end to worry about. For setting up my legal entities, I have a specific law firm that I've used in the past and will continue to use. They've been a big help over the years, and they've actually been a big part of starting my own legal career as a commercial real estate attorney, so I have a strong connection with them, and I plan to keep using them going forward. So even though I am an attorney and could do a lot of it myself, I do outsource it in any event to not only get a second opinion, but also to leverage my time back, because all of this takes time. And to that, another thing I outsource on the back end is accounting, and this is getting increasingly complicated as we now have multiple states, multiple tax returns, and have other things to worry about on the back end as the portfolio continues to grow, slowly but surely. That's one thing that is a little bit frustrating. We don't have a huge portfolio throwing off tens of thousands of cash flow every month or something like that. So it's a bit annoying having to pay potentially a couple grand in accounting fees, legal fees, filing fees, just to kind of maintain the overarching structure. But I do it this way because I plan on scaling over the long term, and I want to make sure things are done correctly from the get-go, because it's a lot easier to start right, pay up to make sure that everything is correct, so that when I do start scaling, we don't have to go backwards and try and unravel problems that I may have caused by doing something incorrectly. It's a lot easier to have the infrastructure set up first before you scale, but it shouldn't be used as an excuse against taking action. So that's the structure I have for my out-of-state rental portfolio. In short, I outsource things. That means I can take the time that I would have spent on actively managing the portfolio and the back-end structure and everything, and instead could spend it towards my career or building a business and doing other things that might be more lucrative or more fitting towards my skill set. Otherwise, like, comment, subscribe, all that great stuff, and until next time, take care.